Looking at the big rally we've seen in stock markets to start this week, one would think that happy days are here again and that a lot of the uncertainties facing markets have gone away. But trading in gold and the Japanese yen, some of the core defensive havens, tell a bit of a different story here. You would expect that for that with the way the stocks have gone and the way that capital is coming out of defensive havens, and that gold and yen would be absolutely crashing today. And that hasn't been the case. And the reason I think that is because there's still quite a bit of uncertainty there facing the markets. There's still, as we can see, that a day is an awfully long time in politics, and there's still 3 more until the Brexit vote on Thursday, and a lot can happen between now and then, and we could still see volatility regardless of which way the markets go. So I think some people are still kind of staying a little bit hesitant about that. Oh, I mean, there's 2 groups of people. There's those that are hesitant and park their money in defensive havens, and there's those that say bring it on and are in trading and taking advantage of opportunities. But we're not seeing the defensive havens going down as much as the rally in stocks would imply that they should have. So that's important. People are still hedging a little bit on that. Plus, we have a speech from Fed Chair Yellen on Wednesday, who could possibly set the record straight on the comments we had from St. Louis Fed President Bullard last Friday, where he sent a really big warning signal about the U.S. economy, cutting his GDP forecast and saying the U.S. doesn't need more than 1 rate increase for the next couple of years. That's not a very good sign about the outlook for the U.S. economy. So that also could be keeping some people back in the defensive areas. So if we look at trading in gold today, I'll bring this out a little longer, where we did see gold start to trend lower overnight, but then we've actually seen as the day has progressed, it's leveled off here. So it hasn't been crushed. It's gone down, but not too badly. I mean, it was bumping up 1,300 to finish the week. It's still pretty much near the top of its 1,200 to 1,300 trading channel here, still holding this 1282, and this little doji candle here tells us that bulls and bears are pretty much in balance. So while stocks went screaming higher, we haven't seen people go running out of gold either. So that suggests that there's still some concern out there of some of the things of what may happen this week. We actually are, though, seeing gold momentum rolling over, so there is a possibility of a correction. If we do get another risk-on mode in the markets, and at some point gold could end up coming back here to the 50-day average near 1255. This initial support level here is 1277. We start to break 1277.75, which suggests a bigger outflow of capital from the defensive havens. Moving now to look at the Japanese yen, I'm going to just show a couple of yen pairs here. I'll start with pound yen. No question about it that the shift in sentiment back towards the remain side, although to me it's back towards a neck-and-neck horse race from what I can see, has definitely sparked a rally in sterling, and that's showing up in sterling yen. Yes, we had this big hammer candle last Thursday, an inside day Friday. Now we've got this breakaway gap here, and it's starting to work back up. So it's broken the downtrend. It's back above 150. It's back above 151, working its way higher. First resistance is here around 154.75 to 155, and the 50-day average is up here around 156.50. The RSI is telling us downward pressure is starting to ease, so it looks like we may be coming out of a big washout down here back into this wider trading range here between, say, 150 and about 165 for sterling yen. And if we do get a remain vote, we could see this continue to advance. If we get a leave vote, then we could see a pullback. Although I still think even if leave won, the pullbacks, a sell-off could be contained here by this Thursday low. I think that was pricing in a pretty high probability of Brexit already. Moving to the dollar yen. Dollar yen's another really interesting one because it has benefited dramatically in recent weeks from capital flows into defensive havens. This has been the first call for people looking for safety along with gold. And what are we seeing here on the 2-minute chart for the yen? Nothing. It's pretty much flat. You would expect the way that the stocks are acting, dollar yen should have blasted off today, and it hasn't. Look at this. We had the hammer candle. We've had a good solid low, not quite a hammer, but still a good solid reversal here. An inside day working up. We're still in this trading range here of about between the 103.50 low and 106 here would be first resistance. But look at this. This 105.30 here where the double bottom broke. 105 round number. number has not retaken these, even though it's oversold. There's every reason for the yen to rally, and it's not. And when that happens, you have to ask why. And the reason I suspect is that people still think that there's a potential for significant volatility in Europe, in the pound, in the euro, in European stock markets based on the Brexit vote later this week, and we still haven't really sorted out the outlook for the U.S. economy either. There's enough uncertainty out there to keep certain people on the sidelines. I still expect we'll see the dollar yen to be volatile this week, but it may be throughout the week. But so far, the yen and gold are not confirming the rally we saw in stocks.